Hello everyone, welcome to Just Invest Today, and in today's video we're going to talk about inflation and if buying dividend stocks is the way to go right now. I've been doing a lot of research on actually dividend stocks because I want to earn an income and see my companies appreciate the stock price. So I want both angles, man. And if we can get both, especially in this inflation environment, that's just a double-edged sword and we can just kill it in the market. So tell me if you want me to do more videos on actually buying dividend stocks, buying dividend companies, and how to look for them. Can you please like this video, subscribe to my channel, man. I'm on the road to 1,000 subscribers. Can you please help me get there? I'm always going to be providing you with amazing content, new content every week. Thank you so much. In this video, we're going to talk about these 3 stocks these analysts say to buy or actually to watch for and to look at, because these can be dividend producers as well as good stocks that are going to appreciate in price. So we kind of want to look at both angles because that's going to be the perfect inflation hedge. We've seen the articles inflation going up like 10%, and they say that it's only at like 4%, but you know that's fake. That's all a lie. So we really gotta beat inflation in this market. Why dividends matters more today than ever. A big reason, ultra low interest rates. The 10-year US Treasury note was recently yielding 1.4%, down from nearly 1.7%. So if you're in a treasury, you're just getting killed. You're getting 1.4%, which is just not enough in this market. And you can honestly see that lasting for a while right now. I don't think that's gonna ever go crazy at like 5-6%. That's probably not gonna happen. So we have to prepare ourselves. That's why we gotta get high paying dividend stocks or stocks that are actually going to appreciate in price. We can get both angles because I think I'm going to start wanting to generate more income just through my investments. Like, can you imagine your investments growing and your dividend money coming in growing? Like, that's an amazing double edge, man. So that's what I'm going to be looking for, because when you're trying to think about bonds, they're not giving you nothing in this environment. Citi Global Wealth Investments reports favors incumbents with consistent record of increasing payouts in sectors that include semiconductors, consumer staples, and healthcare. And that's what's key. When we're looking for these companies, we want to make sure that they have consistent payouts. They actually increase their dividend year after year after year. They're still strong, competitive companies, because just buying a stock that just has high dividends or pays a high dividend, that's not enough. We can get bankrupt companies or companies going bankrupt that are still consistently paying a dividend or a high dividend. That doesn't matter. We want these strong franchises that are stable, paying a dividend year after year after year, no matter what, and still being a strong, competitive company. So that's what we're looking for. And look at the 3 things they give us. They give us SWK, Black & Decker. So when you're looking at Black & Decker, look at this stock price. This was the March crash, which had a huge comeback of over 99%, paying at 1.6% dividend. That would be a good yield if you bought it back when it crashed, but that's still not a bad yield for a strong company, man. When you really think about it, it's still gonna be a strong company. I doubt this company is gonna go anywhere. So that's a company you can look at. Animal health powerhouse Zoetis. I've never heard of Zoetis, but this company is on my radar now. Look at this star chart from 2017, man. 349%. It's only paying out only has a dividend yield of 0.55%, which isn't amazing, but they're saying they're going to increase their payout. So it's an American drug company, the world's largest producer of medicine and vaccination for pets and livestock. So that is actually an increasing market. I remember someone saying, I think if you watch Fresh and Fit, that the cat market and the dog market is going to increase as there's going to be more single people than ever. People are not getting married, people are staying single. So there's going to be more pets out there. So when you think about this could be an amazing investment. I'm going to probably do a deeper dive in this company, man, because this company might look like a good dividend stock plus an amazing stock that's growing as well, which is amazing. Lastly, we got McDonald's, which in September said it would increase its quarterly disbursement to $1.38, a share up 7%. She cites simplifying the menu, strengthening the drive-through business, building up food delivery, and sharpening its digital strategy as key growth drivers for McDonald's. They can improve delivery with digital, they can improve store kiosks, and they can improve mobile apps. So since the March crash, actually McDonald's 60%, that is not bad at 27 PE, 2.10%, man, dividend yield. So honestly, McDonald's is here to stay. That's what I'm trying to say. You're looking at these companies that are here to stay. Are increasing their business. They're getting competitive. They're improving their dividend payout, their yield. And this is the companies where I'm going to start looking for dividend paying companies with a strong business and a competitive advantage, man. Because in my opinion, I feel like I already have my growth sector, my growth stocks. And now I want stocks that actually pay out a dividend so I can get like a monthly income from all these dividend paying stocks. So I'm definitely going to do more research on these companies. But talk to me. What do you think about this new strategy, guys? Can you please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace!